In today's video, we're going to discuss which Yieldmax funds I'll still own after they raise the maintenance on most Yieldmax stocks. Yieldmax funds help us earn over $500,000 per year in dividends, as you can see below, almost $600,000 per year in dividends. And our performance and value shows that we're still beating all the indexes. We're up 19% for the year, as you saw in the last video. The SP is up 13, the Nasdaq's up 11, the Dow's up 7, and the Russell's up 3. So I have to state my performance in every video so that everyone is keeping track of my performance and knows that margin works, okay? Yes, we get these dividends of over $500,000 per year, but we're also outperforming the market with margin, Yieldmax, Roundhill, Cornerstone, and Defiance funds. These funds and margin help me live free from 9 to 5. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So we're beating all the indexes, and today we thought that maybe we'd break the 200-day moving average, as I showed you on the past video. The market is at a make it or break it point, and so today we are up 13,000 or 1.16 because the market decided to rally. If you look above, the Nasdaq was up 1.16 as well, so we're in line with the Nasdaq. And also, if you look on a complete view, we beat the market handedly, okay? We beat the market by half a basis point. So 1.67 is what we're really up when you factor back in margin. So we're beating all the indexes with this approach, and we thought that Yieldmax was going to take a hit today if the market took a hit. But again, the market decided to rally, and so we're ready for both directions. If the market goes up, we benefit like we did today. If the market goes lower, then we have our put options on and other tools ready to benefit from as well. As you can see, our margin debt is now $350,000, and so our dividends of over $500,000 will pay back our margin debt in less than 1 year. So I'm not worried about my leverage here because my dividends pay this back each month. We get about $40,000 to $50,000 in dividends each month. And I'm not worried about my margin interest because I've negotiated it down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. So just keep that in mind. So we're talking about the Yieldmax stocks that I'll still own because we had a maintenance change across the board with Yieldmax about a few months ago. And when NVIDIA went to 100% maintenance, for example, it made me have to shift a lot of things around in my portfolio because 100% maintenance means it sucks up 100% of your equity. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of this, around 1 million in purchasing power that everyone is granted to them in their brokerage accounts. I'm just using a small amount, this 350,000, which my dividends will pay back in less than 1 year. So every month my cushion grows from a margin call. We can withstand over 20% corrections in the market and still withdraw freely out of our accounts. We can still pay our bills and live free from 9 to 5 by using my E-Trade checking card. I can just swipe it and go wherever I want in this world. Even with this debt, I can still add to my debt. I can just swipe my E-Trade card, go wherever I want, buy whatever I want on margin with the lower interest, lower than credit cards. And then my dividends pay that back at the end of the month. Again, $40,000 to $50,000 in dividends, and we have about $10,000 in monthly expenses. $5,000 for bills, $5,000 for loan repayments that I'm doing outside of my account. So we had this maintenance change across the board, and that's what really sent shockwaves through the Discord community, because some people were even in margin calls prematurely since the margin maintenance went up to 100%. If you need help understanding maintenance, that's in my Volume 3 e-guide. So NVIDIA went to 100% maintenance, but the naked options are still 50% maintenance. That's how I still was able to hold on to NVIDIA. I sold puts on NVIDIA so that I could lower my margin by about $500, and we lowered our risk because when you sell puts on NVIDIA, then you lower your cost basis. So here's the NVIDIA right here, the NVIDIA position that we have. $25 strike, but we got $600, $665 in premium. So that lowered our margin by $1,200 because we have two contracts right here, $665 times 2. That's approximately $1,200 to $1,300. And then that lowered our margin by $1,300 and our cost basis by about $6. Let's just say not $665, but 6 for even numbers. So we went from 25 minus 6 to roughly 19. So if you add in this extra, 0.65, around 18, a little bit above 18 is our true cost basis for NVIDIA. And if you look at the share price for NVIDIA, it's at 21. So we're controlling NVIDIA at much lower prices than everyone else is controlling it at. And our risk is lower and our margin is lower as a result. If you need help selling options like I do, that's in my volume 6 e-guide. Yes, we're down in these total gains columns, but that's not accurate. Just like with dividends, even if you're down in your total gains column with Yieldmax, you have to factor back in total dividends. Well, when you sell options, you have to factor back in total premiums received, and that's what lowered our risk and our cost basis in NVIDIA. And again, that's 50% maintenance for NVIDIA, whereas the NVIDIA fund outright is 100% maintenance. I thought that was an extreme hack when I found out about that tip, and I made a video about that. And so I'm owning NVIDIA instead for the compounding ability, because we're not able to get compounding gains with NVIDIA. It doesn't move upward, left, or right on its chart for long. And then as it falls, the dividend falls. So it hurts your ability to repay your margin on time. So you want to be aware with these Yieldmax traps with NVIDIA, because NVIDIA will still do well long term if you hold it long enough. But when you're using margin, you don't want to get hurt up front in your margin. And again, you're not able to compound these massive gains from the AI boom in NVIDIA through NVIDIA. Yes, you could keep dripping your dividends and compound your gains that way, but if it keeps falling, then the dividends fall over time if the stock falls, which again hurts your ability to pay back your margin. All right, the other Yieldmax stock that I still own is Tesla, because Tesla is only 50% maintenance. For whatever reason, Tesla did not rise in maintenance like NVIDIA and other Yieldmax stocks did, so I still own Tesla 50% maintenance. That's why I own Tesla, and it's a large part of the indexes like NVIDIA, but Tesla is 40% maintenance. So I don't want to just own the stock of Tesla, because again, it's 40% maintenance, whereas NVIDIA's stock is 30% maintenance. So that little variation there makes a big difference. So I still own Tesla because of the maintenance and because it's a large part of the indexes, and we have Crash, CRSH, to hedge Tesla in case Tesla takes a dive. Of course, our dividends in Tesla will cash flow the position over time. We don't really care what Tesla does. But again, when you're using margin, you want to be able to withstand the pain up front. So we have a little bit of Crash to offset any pain that may come from Tesla, and then Crash still pays us a dividend that helps cash flow that investment as well over time. So I use Crash for Tesla, and I use dips for NVIDIA, and then I have my overall insurance on my portfolio. I buy put options on QQQ and SPY. Those were up nearly 2,000% during the recent crash, so we can withstand over 20% corrections at all times in our portfolio, and then we can still withdraw out of our account and pay our bills. But should we reach a 30% correction over the course of a month, which is, over the span of a few days, we'd reach a 30% correction, well, then the VIX would spike and go up like crazy, which makes our options go up like crazy. That's how we got an 800% gain on that Black Monday. So if we got a 30% crash, we'd make well over 2,000% in our option, which equates to over $1 million, because just do 100 times 2, then do that times 2, times 2, times 2, do that 15 times, and you're at over $1 million. It just takes the right strike prices and the right dates to get the best price performance on those put options when the market's crashing. And it takes a true crash to do this, okay? If the market's falling 30% over the course of a year, then we don't care, because our dividends pay back our margin and we never reach a margin call. But should we have a crash overnight where we go down 30% overnight, well, then our options would make over $1 million in that event, which all of my members saw on my lives during the Black Monday crash. They saw my options up 800%. Had I just let those compound, we would have made over $100,000 on that Black Monday. And that was just a 15% crash. Imagine a 30% crash. If you need help buying options like I do to insure my portfolio against a market crash, that's in my volume 5 e-guide. Okay, next I own Misty as well, okay? Misty is a large part of the Russell 2000. So Misty, which is the MicroStrategy option income strategy ETF for Yieldmax, Misty is still 50% maintenance. They didn't raise maintenance on that. And again, it's one of the largest holdings of the Russell 2000, if not the largest. The last time I made a video on Misty, it was #1 in the Russell. So it's still 50% maintenance, and it still gives you Bitcoin exposure with index exposure to the Russell 2000. So I still own Misty, and then I sold puts on Coney because Coney is not indexed, but it has naked options that I can use at 50% maintenance. As you can see here, it's 100% maintenance on the long side, but the naked options are 50%. So that's why I sold puts on Coney, to lower my risk, just like I did with misty. Don't be scared of selling options on stocks. They are safer than buying the stocks outright because they give you a cushion in case stocks fall. They lower your cost basis and lower your margin for you. Just make sure, again, that you ask for level 3 options so that you can get the naked options. Okay, I also own Yieldmax still. Okay, I said I was going to sell all of Yieldmax and all of Yieldmax, but Yieldmax is trying to change how they do some of their funds. I hear they're going to be using some spread so that they don't cap the upside. So I'm still going to hold on to Yieldmax because it's high quality, but Yieldmax has a lot of lower quality names. I definitely sold that today, and I sold some Yieldmax, but I didn't sell it all because I have a hope that Yieldmax is going to turn things around on how they manage this fund. And then I bought Fangu for more compounding power with the Mag 7 names, as I said in the last video, and I bought FangD to hedge Fangu. Okay, USOY, I still own this because I need commodities exposure in my portfolio. Energy is a small part of the index, but I want to control energy through USOY because USOY doesn't have the same headline risk as an energy stock, and 50% maintenance, that's better than USOY. And YBIT I still own because YBIT has 50% maintenance as well. Again, if you need help understanding maintenance, that's in my volume 3 e-guide. So it's hard to find Bitcoin funds that are 50% maintenance. Most are 100% maintenance. That's why I own YBIT, and it doesn't have the headline risk of Bitcoin miners, let's just say, because YBIT is Bitcoin itself. All right, so 50% maintenance. That's why I still own YBIT and USOY. They're both covering the asset class that I need at 50% maintenance, which is hard to find outside of YBIT and USOY. To get the rest of my Bitcoin exposure, I sell puts on BITX. I even sold some new puts on BitX recently, $20 strike with a $9 premium. So that means that our cost basis is roughly around 11 a share, which lowered our risk significantly, and it paid down our margin by another $4,000. Again, if you need help selling options like I do, that's in my volume 6 e-guide. All right, and lastly, I sold OARC to make way for RDTE. Okay, I like OARC because it's a way to play ARKK funds without the risk of ARKK, but RDTE should have a bigger yield than OARC, and OARC is like small caps, a glorified small cap index. So I'm going to sell OARC because it's 50% maintenance. Why not go into RDTE, which will probably be 50% maintenance as well, but have a much higher dividend. All right, RDTE is the Russell 2000 Roundhill index. Then we have QDTE and XDTE, which gives us our index exposure. We also have Cornerstone, which is our major index play. This is a 5-star fund on Morningstar. If you don't know about Cornerstone, it moves up or left or right on its chart. So please don't ask me why I own Cornerstone when it moves sideways to down on its chart on a 10-year chart. You have to factor back in dividends, drips, and rights offerings. It has a 21% dividend that it sets every year at its NAV, and it drips that 21% dividend down at the lows for free money every month. Okay, approximately 15% gains every month, because we see the premiums here for Cornerstone are about 15%, as you can see right here. So we're dripping that 21% dividend down at the bottom for 15% extra gains every month. That's why I have about 300 grand of my dollars in Cornerstone. But again, play this fund properly around its rights offerings, which is in my volume 4 e-guide if you need help playing Cornerstone. Many closed-end funds have rights offerings. Cornerstone is no different, and you can really level up your account by playing the rights offerings properly in funds like Cornerstone. When you buy my e-guides, you also get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. And this is how we all level up our account. By the way, here's a chart of QQQY sent to us by Purity Control. It shows you the true performance of QQQY when dividends are included. And this is a very nice uptrend compared to the chart that you see at E-Trade. Okay, QQY, everyone complains, oh my gosh, the erosion in this fund is too bad, I have to sell it and get out. Look at this chart here, guys. It goes all the way down, sideways to down, it looks like, on its E-Trade chart. But as I just showed you on Discord, thanks to Purity Control, this is the true chart for QQY. We have all kinds of information like this in Discord if you're ever interested. Also, if you like my video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.